Hi, you're watching Investor Insights. It's Monday morning, 9:30 Sydney time, 26th of August. Friday night's market action in the States was pretty much non-existent. Volumes, nothing really happened. An interesting note was the building approvals or housing approvals dropped almost 15% from the month prior, and more of the same trade that's been going on for the past 4 or 5 years just happened once again, in which, let's just say, if you've got really bad news, the market is going to go up because there's more expectations of looser monetary policy, mainly in the form of more quantitative easing. So all this Fed tapering talk again has been alleviated because the data is bad, therefore the markets will go up, and all currencies against the US dollar are just gonna shoot, because more, as I said before, the worse the economy, the more QE is expected. It's now come to a stage where not just the American economy, but most Western consumption economies need this stimulus. No stimulus, forget the growth. They're gone. So in the past 4 or 5 years, if you had bad data, the markets had to go up because, as I said earlier, more QE. If you had good data, it's going to send the market up anyway. There's no logic to it. And the only rational explanation for this upward movement, despite the pricing to perfection, the tossing out of PEs, or any other fundamental measure of value, any sort of understanding of investing principles, and anything to do with sound investing is basically out the window, because all that matters is that a lot of lemmings have to pile into this market, drive it up higher, and everybody's got to hope for the best. Technically, everybody's got to hope that an even dumber lemming's going to buy the stock that they have. This is a game that's beyond stupidity. I'm not going to dwell on this because I'm sure I've said this at least 100 times. But the market's overstretched. Enough said on that. I did come across a few articles on Saturday and Sunday morning, which I'm going to put the links in the description box. But I think it's worthwhile taking a quick look at, just so that you have an idea as to how the journalists or commentators, whatever, these bunch of idiots want to voice their opinion about the state of the economy, and here we go, and things going to do with the financial markets. The first one is there's questions on who the next Fed chairman's going to be, whether it be Janet Yellen or Larry Summers, and my answer to that is simple: who gives a rat? Who cares who wins the election, whether it be Kevin Rudd or Tony Abbott? Either way, you're screwed. And just like with whoever is going to lead the Fed, the whole world's going to be screwed. America's already gone. This is just, as I said, a matter of when, not if. Whoever that is going to lead the Fed is going to have the exact same mentality, the exact same idiotic policies of stimulation, of more quantitative easing, more asset purchases, more deficit spending, although technically that's more a government issue, but let's just say loose monetary policy will be basically the name of the game. Enough said on that. Let's not waste our time on that. And then another article which was of particular interest, well, to me anyway, was the International Monetary Fund's Christine Lagarde was at the Jackson Hole symposium, and she made a couple of statements, and all she said was that the central banks around the world don't need to rush ultra easy money exit. When it rains, umbrella sales are going to go up. Alright. If you exit your loose monetary policy, the global economy is going to collapse. Enough said on that one. You cannot have an exit on any quantitative easing measures by the Fed. You can't hike rates anywhere, because if you hike rates anywhere, that will be, again, the end of the global economy. You're going to have all this debt issue, which I've been talking about forever and a day, that's going to resurface. You've got America can't even afford 0% rates. So when rates, which are already being dictated by the market, by the way, are rising, America's already in trouble, because there's no way in hell they can fund the interest bill on their 17 trillion without hiking rates. Or look, I don't even know how they can do it. All I can think about is they're just going to print more money, issue more IOUs, and use those IOUs as interest payments, and the creditors eventually are going to get sick of it. But right now, the creditors, especially China, are so embroiled in corruption that whatever happens there, it doesn't really matter, because the leaders are being paid off, or whatever's happening, they can't get me here in this country, so I can say what I want. They can take monies to keep on accepting these American IOUs to the detriment of their people, but there's nothing that can be done about that. I'm not a philosopher. I'm not gonna try and create a perfect world. That's not my job. All I'm gonna say is the bleeding obvious is being stated over and over again. These guys are talking about shouldn't rush into exit strategies. There is no exit strategies. It doesn't matter if it's the Fed or the EU or Japan. Man, Japan's been in QE mode for 25 years. Where's the rush to exit? They're doing more money printing, but to a scale that's 4 times bigger than it ever was before. Go figure. There's no exit. There's no exit in Europe. If Europe wanted to stop its very low interest rates, its loose monetary policies, and these so-called asset purchases, although nothing compares to the States, all those economies flush down the toilet. 1 microsecond. No, enough of that crap. And then you've got another article which came out on Saturday, which speaks about central bankers debating risks from withdrawing global liquidity. Again, more of the same retarded message from Christine Lagarde. These guys are questioning, debating whether there's any risk or the level of risk that's going to come from withdrawing all this loose monetary policy. And again, the same criticism or the same insight into this article is the same as the previous article. What a load of dog you know what. Why are they debating this? Is this so that they can waste time to get away from their job and have a free lunch or a couple of free meals, a nice accommodation in a hotel, and enjoy the hotel facilities? I don't know why they're wasting their time. They go there, they talk about the same thing year in, year out. Should we withdraw QE? It's a lie. That's not going to happen. And all these journalists are writing about the same thing over and over again. And I find myself talking about the same thing over and over again. It's a total waste of time. Even contemplating withdrawal of loose monetary policy. Now that's the word I use is contemplating. it's just a waste of time, because you know that you can't do it. So if you can't do it, why think about it? No? If you contemplate buying a $20 million house, but you can't afford it, why do you even bother doing it? If you're born in Russia, you can contemplate being the US president, but you know that's not going to happen. So why contemplate the impossible? This task of exiting loose monetary policy is impossible without the greatest implosion the world has ever seen. Enough said on that topic. Now we've got another article published on Friday, which stated that Treasury yields, the 10-year Treasury yield in America could see 2% in 2 weeks' time or something along those lines. Who cares? Treasury yields should be at 15%, not 2%, not 3%, not 1.5%. Who cares? Because ultimately, governments are price fixing rates through asset purchases. Interest rates are a function of supply and demand of money. So when you've got a lot of borrowing and no savings, how can interest rates be so low? I mean, it's a very simple concept that nobody seems to understand. When you have a lot of savings and not much spending, then what you do is you drop rates so that the people who save just think, well, I can chase better returns elsewhere. I should take the money and spend it or invest it elsewhere. When you have a lot of borrowing and not enough saving, obviously, then you want to discourage all these lending by hiking rates. Now, that's in Economics 101 sound policy lectures. Sound fiscal policy, sound monetary policy lectures. The thing is, there is no such thing as sound monetary policy around the globe. It's all stupid. You've got so much borrowing that this debt crisis, enough said on that. The catastrophe that's about to happen, I don't really have any, my English isn't that bad, but I can't even think of a superlative that's big enough to describe this implosion. So having 3% yields that's somewhat dictated by the market but predominantly the Fed is just a load of rubbish. If you saw what 1% rates back in 2003, 2004 did to create speculative asset bubbles, like in the stock market and the real estate, but more so in the real estate market over in America, imagine what 0% interest rates for 5 years is going to do. The bubbles that have been created since are so gigantic. Again, I can't think of superlatives. And the excesses that's been created, the imbalances that's been created as a result of all this loose monetary policy. This is going to be the end of the financial world. And again, I'm not a doomsday prophet. This is just common sense. If you can't see that, well, you have to go back to Economics 101 or watch a lot of the earlier fundamental series that I shot. Yields at 3% are still too low. It doesn't discourage borrowing. And the problem worldwide is there's too much borrowing. Anyway, enough on that. And yesterday there was an article about China possibly becoming the world's largest oil importer by 2017. Well, China is a manufacturer, so it needs this stuff. America is now producing more of its oil, so it's becoming a lot more independent. But just because you produce oil doesn't fix up your problems. You use that oil in a non-productive way. So China, regardless of how much oil it's going to import, that number may or may not, that eventuality of being the world's largest oil importer, it doesn't matter if it happens or not. The most important thing to keep in mind is that China is a country where most of its people are still living on or below the poverty line. And the fat cats in government are getting fatter. It doesn't matter what the propaganda that the government statements issues about, oh, we're going to go from a country of exports to one of domestic consumption. If you're working 120 hours a week for $250 US, you won't be able to afford anything. You could not before, you can't now, and you will never be able to afford anything. And this is China's conundrum, in that if they want domestic consumption to increase, then wages have to go up. And if wages have to go up, then China loses its only competitive advantage over other manufacturing nations, because all it has is a slave wage labor workforce, and that's it. Just because it can manufacture stuff doesn't mean that every other country in the world cannot manufacture stuff. It's just that they're able to drive their workers real hard for next to nothing, and therefore if you know anything about production or anything about economics, especially business economics, you should know that one of the largest costs of any business is labor. So thus, no costs in labor means that your goods will be cheaper than anybody else's. And even now, you see a shift towards Vietnam, Bangladesh, Thailand, because there's the wage inflation in China is creeping up. So China may or may not reach that target of being the world's largest oil importer, because at the rate of wage inflation that they expect to feed domestic consumption, China may lose its entire manufacturing advantage probably by 2017 anyway. And the other 500-pound gorilla in the room is that China, well, I've already said this, has no domestic consumption in comparison to its exports. But those exports are going to come to a grinding halt when Europe and America basically implode from, again, this debt crisis. And China, I still don't know why they keep on sending goods over for no payment. But it seems that the fat cats have been paid off or have been given enough incentives to keep on accepting these balance of trade deals. There is no deal. It's just send us stuff for nothing. And in return, we'll give your people jobs. Anybody with any common sense would not take that deal. But the Chinese are happy to do it, so that's their problem. Now today, I don't think that there's some articles about UK seeing some growth, some broad, some UK shows broader, faster growth. It's just a lot of rubbish. It's all inflation. Enough on these articles. It's just It's just all crap. You guys can read it yourself and you can make up your own mind. But today we can see, this morning we can see, well, things haven't really moved from the close on Saturday morning. Aussie dollar 90.3, pound 155.80, euro 133.80. As I said, the prospect of more QE because of the bad housing data means that things have gone up a little bit. How long this lasts? Who knows? I'm gonna get back to the trading desk, and let's see what tonight brings, and I should keep you informed with whatever else happens around the financial world. Until then, have a good one.